Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn Associates with your weekly review for the financial markets of this end of the month, April. That's April 28th, 2016. And you're looking at where the settlement prices will come in. There's another 30, 40 minutes of trading coming up into the S&Ps today, but I'm doing this around 320. And that'll be where the market about finishes. Gold will be a little bit lower than this. The bonds and notes, they've got a bit of a rally that went on today as well. And the energy markets, well, the big story for the week is gasoline just got smashed. There's no other word for it other than smashed. And as long as those imports keep coming in, there is a problem there. But where the runaway is continues with this baby, the NASDAQ. It's just plain the poster child of a massive bull run that began back here and has not stopped yet. It paused for 2015. Yeah, I'll use that word because if this is a monthly chart and that takes up that year, 2015, then it began moving in 2016 and it's accelerating in 2017. So the Trump rally, all well and good, contrary to what ABC, CNBC, well, it's ABC, CBS, and NBC, the three news stations that really hate the man. If you go to other stations, you find people that like him, like Fox. It goes all over the board. But the mode of the day is beat up Trump and yet watch the stock market rally. As you can see, up 142 for the month. Pretty impressive. And as you can see out of this sideways action, lifted one more time. As the earnings are coming out and everything's looking there. This is the weekly chart, though, so that's a little different than the monthly. And you do have higher lows, higher highs, which is bullish. Now, when you put on the 18-week moving average of closes and the 100-week, market's over both, still lifting. So where might it go? Maybe 56.43. And from here, that's not that far now. That's another 60, 70 points in the market. That's the upper Bollinger Band. This market has not had a problem hitting the upper Bollinger Band. In all fairness, if you've been waiting to buy the 18-week moving average of closes, you got to go back to December of 2016, the last time it hit it. This is why I say it's been the poster child, just a runaway market to the upside. And momentum. I want you to look how the slow stochastic has stayed all year long on the weekly chart in one phase. This is extremely rare. Just locked into a bull phase. Market is a one-sided market. You see what I'm saying immediately when you go to the weekly chart of the Dow. You see how the market fell back last week, hit the 18-week moving average. That provided the support, and away you go. I call this red line, which is the 18-week moving average of closes, the line in the sand. Often it's the number that prices like to go back to if they've been up or rally up to if they've been down to decide what they're going to do next from. And this market made a decision. It's going up until it takes out 20,311. Nah, don't talk to me about the idea of bears in the market. They're just not here. Momentum tried to correct a little bit, did so, and now it's gradually turning itself up again. In the Russell was the weakest and suddenly got very strong. And this week was just a blow-away week in the market as it's up 20 points. You can see how it hit the lower Bollinger Bands, went sideways, and created narrowness. You don't see that, by the way, in the weekly chart on the S&P or the Dow. You could argue that it's got something of that, but not as narrow together as you see it in the Russell. And I think it's just crystal clear there that the market got a bit tighter. And now the question is, can it push itself out of here, or does it fail up at the upper Bollinger Band? Given that this market has not hit the upper Bollinger Band on a weekly chart in all of 2017, there's a lot to be said that the market ran up there. if, as many analysts say, the second and third quarters of the year are going to be even stronger than they should be than what we call an anemic, I think it was, first quarter. Don't get me wrong, you had certain companies that did well, but as a whole, if you look at the earnings, they beat, but they weren't on fire. Now the question is, will they be? And that's something that analysts are going to watch. A warning sign could be setting in. I want to take you to a daily chart of the VIX. This is yesterday. You have an outside day down. Look at the range, 1033 to 1108. Today, you take out that range, you first make the lower low, you come back. Is this a sign that the market's ready to lift a bit and we walk in at the beginning of May and see something of a correction? Could be. So you should have your antenna up because this is important. Take out on Monday or Tuesday the 1029 level. I'll change my tune and say, nah, that correction looks like it was a setup that just didn't come about. Don't do that, and I think you could get back up maybe to the 100-day average. Don't get me wrong. I'm not saying there's anything bullish on this chart, and it is loaded with resistance, so that's the important point. It's also oversold. This is not weekly. That's a daily chart. If you come to the 10-year notes, the market is in an uptrend. Higher lows, higher highs, momentum trying to turn down. So you're getting your first attempt at the market backing off, and that's after having the prior 3 weeks the market hitting the upper Bollinger Band. Could this be where eventually the market starts setting it up for what the Fed may do as we get into the month of June when they're talking another rate hike? It's possible. The market is not expecting the Fed to do anything in May. Doesn't mean they won't, but it's not expecting it. In the dollar index, momentum is still pointing down. You've got the pattern of lower highs, lower lows, and you're trying to arc down right now. The Bollinger Bands on the weekly chart maybe carry the market to the weeklies of the 97.55.90. So you got to look at that and ask yourself, is it a support or is it going to be able to let go this week? Right now the market has all the indications on the weekly because it doesn't act like a daily on the momentum, that it's just pointing down and trying to drag the market a bit lower. At the same time, President Trump's got what he wants because the euro currency keeps acting stronger. The longer-term charts are bullish. Yes, the market's over the upper Bollinger Band, which often, you only stay over it 5% of the time. But given it's a weekly chart, you must understand the time frame here. That means it can stay 5 weeks in a row over it. Now, you rarely do that to get to that 0%. It's more times than not you get to it, pop one way or the other, and you come back. So this market's a little bit ahead of itself, in my opinion. If it extends further, 101.10 figure, right in that 110.10 is what I wanted to say. I said that wrong. 110.10 is where I think it's going. Momentum up until you take out right here, this number. It's hard to believe. Back under 106 even, this market is bullish. So a lot of people thinking this currency could be going to the 113 area when all is said and done, as inflation is picking up, their economy's doing better. We should not forget also May 7th is the second round of the French elections. The market thinks it's a foregone conclusion that Ms. Le Pen will lose. We'll see what the polls show as we get closer, but this is one of the reasons this market is on fire right now. The British pound, well, guess what? You have sideways action here, and you've churned enough. If this market wants to scare you, it can pop right on up here into the low 130s without a heck of a lot of a problem. It takes, and it's your second week over the upper Bollinger Band. Now, if each week counts as one of the percentage points on Bollinger Bands, where only 5% of the time you close over that, you've got about 3% of the time left. That doesn't mean you can't work a bit higher. You've got to learn to work with slow stochastics in a different manner on the weekly charts than the daily charts. The weekly and the daily, however, are both bullish. Canadian dollar. We keep adding rigs. We keep the NAFTA alive, but Canada realizes they have problems with the U.S., and it's in all kinds of trade. As you know, we did the tariff on the lumber this week, and that put the Canadian down. It is at the lower Bollinger Band. It is still pointing down. Resistance, very formidable at 75.27 to 75.74. Still very much a bear trend. And the break in the Japanese yen for the first time since early March has taken the market out of an uptrend. The market now has higher highs, higher lows. On a positive note, it has a bullish crossover where the 18-week moving average did get over the 100. So that's your support zone. Momentum is pointing down. This is going to be a confusing market for a bit. Normally you get a bullish crossover and you look for the markets to rally. Is that going to be the case or not in this currency? It will come alive very quickly if there's any issues that take place between North Korea and the U.S., or will it? They're in the line of fire too, so it's hard to know what it's going to do in a situation like that. Crude oil market still in the bear camp, lower highs, lower lows. We don't know where this low will end up yet. On the breaks, the lower Bollinger Band has done a very good job of supporting the market, and the upper Bollinger Band in offering the resistance. So don't fight those elements as they're working in the market. I can even go further back and prove my case here. So this is a support zone, but it doesn't mean more than maybe you get a rally back into the low 50s and you encounter resistance again. And a lot's going to depend, obviously, on how OPEC does this month of May. What are they going to do? They have a meeting, I think, May 25th. In looking at natural gas, the next high you've got to take out is 334.70. If that occurs, you finally end this bearish phase of the market. And in fairness, the market ended that bearish phase in reality at the beginning of April, because every week it has hit the 18-week average and just hung there. Take that out, though, and what happens is the market's got your higher lows, higher highs, and away you go. I think this week's low is a very, very important low. I don't expect it to be taken out in the 2 next weeks. If it is, it puts up a trap for the bulls here because it's an outside week up. But if you go on your charts, if you take out an outside week up's low within 2 weeks, you often set up a trap the other way. So I would expect that that is the case, and I think this market's going to try to respect that, but time will tell. So with that, I want to remind you of a few things, and we are changing some things here. You know that I offer a lot of products for Modern Trader, and this one's all about volumes 1 and 2. Actually, this one's about the magazine. I take that back. We have volumes 1 and 2 of the Technical Trader, and we've got the magazine issue. One of the things I'm going to be starting to do is, I look at all the chart techniques that are in here, and they're great, and we're going to start putting some of them to videos. Not just theirs, of course, other people's. I'm not partners with these people. I do my own things. But to make a long story short, I've gone through the internet, and I think we can make videos that are a lot easier for you to understand. But the beauty of Modern Trader is they bring so much to you. They have a $79 value that we're able to offer to you free. It's a 1-year subscription along with their daily subscription. Now, this is the May issue that just came out. And as you can see, they're going to talk about the chalk and oscillator. They're going to talk about tail risk and things of that nature. I started already to do the pivot points, finished it, and now we're moving on to MACD and some of the other studies. But we want to get you this 1-year subscription. How do you get it? You give us a call at 866-973-2077. You go to our website at www.iraepstein.com. You'll get this daily focus from them along with the magazine. If you look underneath this video on a number of websites, it says click here for Ira's free offers. This will be there with, as I said, the technical indicators. Just check off what you want, or just click right up here if you're watching me on YouTube. With that, have yourself a great weekend. I'll see you all come Monday.